welcome to midweek session. I hope you're doing well. All right, let's go on to the dollar index and see what's happening. Okay, so since Monday, today is Wednesday, right? Since Monday, dollar index has been stuck in a kind of a consolidation. So I've been warning traders to stay out of the market and just practice what you see and what you think is gonna happen. All right, and if you do see anything, maybe scalp it. Don't look for um, sustained movement. Just scalp it and get out. All right. So currently, I'm not sure what dollar index wants to do now. Based on the monthly chart, right, we are bullish. Okay. Based on the weekly chart, we are bullish. Based on the daily chart, we are bullish, but in kind of a retracement, right? So we have to wait for the daily to align to continue going up. Now, where is that going to happen? Up here. Okay, that's where the daily will line up with the monthly and weekly to continue in that direction. So it'd be advisable, to wait for that or let it come into discount because currently it's stuck in premium relative to this range here. Okay, it's stuck in premium. So wait till it gets into discount and then we continue going up, or you can look for potential sell ideas or sell signals. So you're going to ignore the buy signals and then you're going to go with the sell signals. So what would say a sell signal be? Maybe an OTE, a run on stops. Okay, those are sell signals, and you can use that because we're in premium to find trade ideas on the foreign currencies. Okay, but my personal advice would be sit on your hands and wait till we get displacement and then we can go in again. Currently you can see on the H4 we drop down and then we are rallying. Now if we are going to go up, then this would be a very key impulse leg. Okay, if you're going to continue going up, but if you're not and we are going to go down, then this is also going to be a key high because we're currently trading above the weekly open and it's Wednesday, right? So if they're gonna go down, that's the high of the week relative to we being in premium and price wanting to go into a retracement. So it's not that simple in terms of predicting what it's trying to do. That's why I'm advising traders to sit on your hands. Okay, so if you are trading, the best thing right now is to scalp and or sit on your hands. Euro, you can see what euro is also doing. It's stuck within this candle's range, so everything in here is just sideways. Okay, so don't see this movement that you're seeing as high probability trading. It's just sideways. Okay, so absolutely nothing. And I think I showed you what the highest probability for this week was going to be, this one to the downside. Okay, and you can see that has got a sustained move, even though we had Monday go up, Tuesday sideways, Wednesday we've had a sustained move. Now I actually didn't get a trade on this, but I showed you the other pair that I'm looking at, which was this one here, for a movement to the downside as well. So this is also gonna give you some kind of high probability for this week. So instead of taking a trade on this when the dollar index is actually not giving us a clean direction for today, it would be best to hunt for the trade on Aussie New Zealand or on Aussie pairs, which is what I said on Monday. Okay, because all the other pairs, they are stuck in a range on the daily, right? Relative to Thursday's candle. Right? Thursday has a big move, and then since Friday, we are within that Thursday's range. Same thing here, we are within Thursday's range. Same thing here, we are within Thursday's range. But this one, we had a big drop, right? So that's why we are looking for this to go down for this week. All right. So I think you can look for sales on this pair here. I like the current candle that is printing. It's the H4 candle, right, taking out this low. All right, now because we are going to take out such an important low, this one here, this candle's low. Okay, once we take it out, what I want to see is maybe a pullback to that same candle's low, because we've had price go down here and then go up here, and then we're coming back down again. We wouldn't want to see price go any higher than this from the wick to the the closing price. So once we close this H4 candle, any pullback that happens, right, it's gonna give us a move to attack this low. So that's the one I'm gonna look for and participate in. Okay, because I did not get any entry yesterday. You can see yesterday, if you tried to sell short, you would have been murdered. If you tried to go long, you would have been murdered. Both sides of the market was cleared. Right, London open, goes up, takes out this high, comes right back down, attack this low, goes right back up, attack this high, and now we are down here. So I think the best entry will probably be today, and then we will see a continuation to attack this low, that low, and that'll be it for this week. Alright, so that's what I'm looking for on this pair for this week and today. Alright, dollar CAD, watch this last up candle here. Okay, watch that. Does it trade up to that and then go down? It's not easy trying to predict what these candles are going to do for this week. Now there are several things that I can do with this current price action, right? That's previous day's high, and price has gone and run it, right? So that can give me a potential sell on the lower time frame if price action lines up. Yeah, that's a potential sell right there, right, to come and attack these lows. Why do I think it's a sell? Because we just took out previous day's high, displacement, pullback, fair value gap. So we should see a little bit movement to the downside on that, on the dollar CAD. Okay, we should see some kind of a drop, maybe to attack this low. Like I said, right, just scalp it. If you're seeing anything, don't look for sustained move, because in these conditions sustained moves are not going to sustain. something like this. Okay, just scalp it and then you move to the sidelines, because if you try to buy or sell and hold for I don't know how long you want to hold it, what might end up happening is that you will get caught in a trend or in a movement that is not a true trend or a true movement, like this one. Okay, imagine yesterday. Okay, imagine yesterday, I don't know, you caught a sell here and you were expecting a sustained move to continue to the downside. Comes back and then hunts you down. Or imagine, let's say you caught a buy here and then you're expecting a sustained move. Well, it comes back and hunts you down. The same thing I'm saying here, right, with that, right? The right thing is look for some lows, attack those lows, and then be content with that. Okay, don't look for more, because the condition is not right for more profits. Okay, so on here I will expect them to attack these lows, and then that's it. Euro pound, I'm looking for a run above this high. I'm looking for a run above this high. Okay, the reason is this imbalance, right? This down candle. Okay. Right, we've managed to breach, or we've managed to go above it. Okay, so price going above that, in my opinion, it's kind of looking to attack some form of liquidity, which will be above this high. Okay, so I'm looking for continuation to the upside on Euro pound. My target is up here, right, on the weekly time frame. It's a monthly imbalance, but on the weekly we have a small little gap in here. That's my target. All right, and that's where I think price is going. So you can look to get yourself in line with that direction. Okay, anything that goes down, you want to buy that. Any retracement to auto block, you want to buy that. Any retracement to, if we create a fair value gap, as long as we've not reached here, you want to buy all of that. Okay. Gold. Gold, I mentioned that my target is still down here and here. All right, but we are stuck inside this candle's range, so for me to take a trade, we need to be below this candle, and I believe once we go below that, it's going to be a quick sudden move to the downside. Okay, maybe they might use probably one candle to send it down there. Once we attack that low, they might take one big candle, so be alert. All right, because sometimes price will go below it, come back quickly for a retest, and then run away. I told you the trading ranges. We took out this high, we made a low. This is a pullback. Initially, I wanted to see them go just inside this imbalance in here, but it doesn't have to. But if it did, that would have been excellent, because now, right, that's OTE to go back down again. All right, I think yesterday I tried to buy inside using the order block here as a PD array here, and I got murdered. Right in here, I got murdered. I bought it during the London session. In here, so my mindset was we've hit the H4 order block, and I'm looking for price to scalp to take out this equal high. So on this retracement on the lower time frame, that's where I got in, and initially it was looking good, and then boom, it snapped down to attack this low, and then it killed me off, and then it went for my target, right? So that's why I'm saying, be careful, because when you get into a trade, it looks as if it's going to do what you're thinking, and then all of a sudden something else happens. Okay, so when I say it, I know what I'm saying because I've done it and it's punished me, so I don't want you to do it. Okay, so this was the trade. This low, this high, that low, break in London, retracement, right? OTE hits it, starts going up. Everything is good. We are going to attack that, and then like, nope, we're not doing it. Now, if you're not that disciplined, right here, let me take that one off. Oh, it can't be playing. Oops, I can't use bar replay. Some reason. Okay, they're not allowing me to use bar replay, but if I could, I would have showed you that this candle would have it would have caused a lot of I would say low-minded traders, but indisciplined traders to chase price, because it was very bullish. We've made a low, price is going up. We have, I don't know why all of a sudden you're playing up. Okay. Okay, so here, if you're not a disciplined trader, right, and you trade gold, it will get you excited to jump in, right, and then you can see what it did next. So the last up candle being this one here, once it's taken out, right, we're gonna see a rush to go and attack this low. Now, does it give you the permission to sell? You can, and then give yourself maybe this high as your stop loss. Okay, but I still don't trust it, even though I trust the direction. It's not about the direction, it's about the fact that price can stop you out and still move in your favor. That's what I'm thinking. It's not about the direction. The direction is right, okay, because of the draw on liquidity. The direction is right, but the fact that even though you're right, they can still come back up, stop you out, and then move in your favor like it did here, right? The direction was right to go and attack this equal high, but they everybody off before going to that level. That is what I'm talking about. So you can be right in your direction, but probably price will not allow you to be in there to get to that level. Okay, so that's what I'm looking for. And oil is a typical example, right? On Monday I told you where I think oil was going to trade to, here and here, and I was anticipating price to come here to form the high of the week and then give me a movement down there, but it didn't give me no entry. Now you might be thinking, well, you could have entered here or here or here. Nope. Okay, because we are on Monday, Tuesday, likelihood of price going up, right? So if you try to sell short, you can't get taken out, and then price goes up a little bit more and then drop. Okay, so this to me is a no entry trade. I did not get an entry, and I shared that in the Telegram channel, right? That I did not get no entry. So what is it going to do next? This is where I stop looking for entries, because if you look here, okay, if you look here, this low to this high, that is what an impulse leg. This is OTE. So we can reverse here and go back up to make a new high, or it can go down. So if you are not in any trade, this is not the level to be looking for a sell. All right, now is it a level to buy? You can participate in a buy in here, right, with a risk controlled entry. So what do I mean by that? This is an impulse leg, this is optimal trade entry. So if you want to be a buyer, you buy, but with controlled risk. So let's say this is my low, and that's a little gap there. So if I'm buying that auto block in discount right here, my stop goes there, and then I start looking for equal highs or price to rebalance these gaps. Why? Because we are in optimal trade entry and we are in discount, so it can work. Am I going to do it? Not likely, because I'm looking for weekly expansions to the downside. So this will not be a trade for me. My trade should have been look for sell to go down there and be done for the week. That is my trade. The buy is not my trade. So, I'm not going to do that. Because when over the weekend, my analysis was planned around selling, not buying. Okay. So if I buy, then it's something that I just came up with during the start of the week, and you don't want to do that. Whatever you plan going into the weekend, that's what you do. That's why you do your analysis over the weekend when the market is not moving, so that it gives you the kind of the static chart, and by analyzing the static chart, it gives you everything you need, because when price is moving, you're gonna have so many questions, right? So when you analyze a static chart, it gives you everything you need to trade for the week. And then once the week starts, that's exactly what you do. You don't change it. You just wait for things to line up the way you've planned over the weekend, and then you execute. Okay, don't do your analysis for trading during the week. Don't do that. If you do that, you're gonna struggle. Okay, when the chart are not moving, do your analysis. Or if you want to do intra week, do it when the market is closed, like anywhere from between 10 and 1. That's when the market is dead, before we start the Asian session. So that's when you will not be influenced by the movement that you're seeing. All right. Okay, Bitcoin. So Bitcoin traded to the imbalance that I anticipated. Ethereum did not trade to the high, but it traded to that imbalance. So in my opinion, I think they probably done with this pullback, and they will start price is gonna start accumulating, right? Price is gonna start accumulating, so be careful. Don't look to buy cryptos again. Sit on your hands and wait, because now I think they're gonna start accumulating. We've traded into a very deep discount. All right, same thing here. So if you're in discount, accumulating can take place, so wait. Okay, let's go here. This is the pair that I'm in right now. I took a trade at 7:30 right here. So the logic behind the trade that I took is here. Remember, I said I'm looking for a continuation to the downside for the week. I'm hunting for the high of the week to form. So this is Monday, this is Tuesday, this is Wednesday. The high should be forming by Wednesday London, between Monday to Wednesday. So when I woke up, I saw we had placed in a swing high. 5 o'clock candle is here. Swing high formed. This one pulls back. I sell short. Now where's my stop loss? My stop loss is up here. Why up there? Because this is the range that I'm using. Okay, so it's like price traded to OTE and gave a confirmation. So I went short and then leave my stop loss here. Your question might be, why don't you leave it up here? Because this is a range. So if I'm wrong with that entry, it can come back up and still go down. And I don't want to do what? I don't want to be giving market the opportunity to take me out before moving in my favor. So to be safe, I've placed it up there. Okay. And if they take me out from here, then I'm gonna use this range and I'm gonna hunt for another sell up in here. All right, so whatever happens, my draw on liquidity is down here. All right, so that doesn't change. What changes that? Unless we go above this high. So with this initial sell, I can be wrong and then they could take me out, no problem. I'll take another one up there. Okay, so I think yesterday, let's go to the yen. Yesterday, not you guys, but with my private group, I mentioned that the yen has traded to all-time low. Okay, so they should be aware that it can reject. All right, so I was actually looking for a midweek reversal on the yen pairs. So my goal was maybe Thursday they take out this high, and then I'll hunt for sell. Why? Because we are trading all-time low, and all-time low is always gonna give some form of a rejection. So I was hunting for a midweek kind of Thursday reversal up here, but you can see they didn't even get there and price has rejected. So that with that rejection, what's price gonna do? I think that we might trade softer till the end of the week. So this high, this imbalance, and that price might trade into that into those, okay, to give basically this low to this high kind of OTE. So somewhere here and there, that's why I think they're taking price on this pair. And then maybe next week it will run back up again and then reverse and come and attack this low. All right, because next week is actually the beginning of July. Friday will be the beginning of July. So what the narrative that I'm building in my head is that we might end up coming down here, and then maybe Friday we start going up, then Monday, Tuesday we go up, Wednesday, Thursday take out this high, and then run back down again. That's the kind of scenario I have in my mind right now. And why do I have that scenario? Is because the yen is trading at all-time low. Okay, if you go onto the 3 months, there's nothing here. All right, am I calling for the low? No, I'm waiting for signatures to suggest that. Okay, I'm waiting for signatures to suggest that. What would that be? Well, for you guys, it's just for price to close above this high. Okay, but for me, there are other things that I look for on the lower time frames. Right now, yes, we are trading off from this order block here, but for price to go up, they need to break this. Okay, and I'm watching other stuff on other things as well to see if I can get a trade idea formulated on this. So if you're trading the yen pairs, be careful for longs. I think you should wait. It's trying to trade into this scalp. Same thing applies to that. This low to the high. You can see we are in premium, so it's gonna trade. You have equal lows in here, and then a fair value gap down here. Measure the high to the low. I think that's what it's trying to reach for. Pound yen. Pound is a little bit strong, but nevertheless, I think it's gonna do the same thing. It might trade back into this imbalance. Euro yen, same thing. This is the one I actually, I kind of put my whole being into attacking this high, right? Even last night I was thinking maybe I'm gonna miss it, so should I buy this order block here? And I was like, nope, I'll wait till London, right? And you can see, so with euro yen, because we have some strength in euro pound, okay, euro pound has got some strength. I am actually not looking at anything on this in terms of sales. If anything, I'm looking for this side to be run, but these two, I'm looking for them to continue going down. That one, it can, right? That one, I'm not convinced that we're gonna come down here. And it might sound a bit weird. It can do that because the current condition, the current market condition will allow price to do that. Why? It's summer, it's June. Price is allowed to move around freely without any kind of restraints, right? It's just moving around the way it wants. And I think this particular week there is some kind of manual intervention going on. There's some manual movement. You can see it, okay? Especially when dollar is going, where is it? Right, when dollar is going in a sideways market, that is a sign of manipulation. All right, so leave this one alone. CAD yen, I think this also can trade down. It can trade back into OTE as well, because on the CAD, I'm looking for one more run to attack this low here. Right, OTE, market maker sell model, to attack this low here. You can see equal lows there. So CAD yen can also move down and somewhere here. All right, and it's coming off from daily imbalance. So I'll look for, I'm not actually gonna trade it, okay, but I will look for a movement down on this, and then that pair I'm actually staying out. I'm not touching it. Why am I not touching it? Is strength against strength this morning, right? We have this showing a bit of strength. That one is just up there chilling, right? So a bit of strength in that one as well. Hence, you know, you want to stay off. So maybe look at the New Zealand yen and Aussie yen for some scalps to this equal low here, and 50%, that small little gap there. You can look for some scalp to trade there. Okay, let's go to the indices. So with the indices, right, I gave you on Monday that we could go up and trade into this range, and I think I did mark out this last up candle. I can't remember. Here and here to form the high of the week to go down again. So right now I think they've placed in the high. I'll find it so weird to see price come all the way back up here. Okay, so now the drawn liquidity is to the downside, so the Nasdaq will be the favorite one if you're asking. That equal low will be the favorite one. And now during this landing session, you can see they've given a displacement here. So New York session, what you can do is actually frame some kind of a pullback into this. So your stop loss should be framed around this impulse leg. Okay, this high. That's where you should frame your trade off from, because we've had such a big move down. If they do go above this, that's not good, so you don't want to see that. Actually, let's use the H4 high, so this one. Okay, I'm using this H4 high. All right, when I finish, I'll talk a little bit about breakers. Okay, I'll talk a little bit about breakers. So frame your trade around this impulse leg for the New York session, and looking for a run for this low and 10965. Okay, 10965. And then S&P 500, that's the one I'm actually gonna trade. I like this here. Okay, all the trend line traders have been punished. If you do trade trend lines, I don't know how they trade it, but you know, it does work for them. It did work here, brilliant. Did work here, brilliant. Might have worked here, brilliant. And nope. So we're gonna look for a continuation to the downside, and like I said, frame the trade off from the current H4 range. All right, and that would be the same for the US 30. We're looking for a run down here. Okay, so pretty much that's all I have for today. Let's go back. Yep, that's all I have for today. Any questions? Any questions? Feel free to ask. Do you pick your trades always off the futures? Could you go back to you, please? Do I pick my trades off from the futures? Yes. I look at the futures. So my decision making, it's very simple. I start off with looking at the seasonal tendency to see where high probability movement is supposed to happen. Okay, so seasonal tendency is like a roadmap for me. That's where I start from when I'm doing my analysis. And then I'll look at price action on the futures market. And based on the seasonal tendency and the futures market, it'll kind of give me an idea of where price is going to move. So this futures will give me what pairs am I going to be trading based on the seasonal tendency, because the seasonal tendency, that it's not on the currency itself. The seasonal tendencies are on the on the futures market. Okay, so I apply the directional bias of the seasonal tendency on the futures, pick up which one is going to be higher probability of moving in whatever direction, and then I'll do price action analysis on the currency, and if it lines up with what I'm anticipating, then I'm gonna go for it. So an example would be this one here. Okay, the seasonal tendency for Aussie was bearish. The seasonal tendency for the New Zealand was kind of sideways. Price action is bearish, and the draw on liquidity is so clear based on the high time frame. Hence, I look to use this trade as a potential setup, or I use this pair for a trade this week. Right? So that's how I make my decisions. Can you go back to EU, please? EU is over here, and this is EU. What do you want me to do on EU? On the H4, that OB we traded on the H4, that OB we traded lower. Is that a breaker? This one, no, that's not a breaker. I don't see that as a breaker. I don't see that as a breaker. You might be talking about this or that one. No, I don't see that. I said I was going to talk a little bit about breakers, so I'll talk about it in a sec. Let me answer these questions. Would it be a reclaim to go lower? To be honest, based on the current market condition, I'm not looking for none of that. Okay, based on what I explained earlier, price trading inside this range, I'm not looking for none of that. Okay, because we are stuck inside this candles high and this candles low. So in here, what makes it high probability? None. Okay, and let me come back to it in a second. How do you know seasonal tendency? There is a website that we use for our seasonal tendencies. You can send me a message on my Telegram. I'll send you the website. Now it's paid. It's paid for. It's not free. Okay, but if you send me a message on my Telegram, I'll send you the link, and you can use it the way you want to use it. Like I said, it's not free, so just so you know that. So this is my Telegram. Send me a message and I'll send you the link to that website. Can you look at NU, AU? Okay, this is NU. What do you want to know? What do you want to What do you want me to do for you on that? All right, that was quick. By the way, this is the website. That's the website, and I'll just send you. No problem. Mr. Vincent, I am currently showing you the I'm currently showing you the New Zealand. What do you want me to do on the New Zealand? I'm sorry, this is the New Zealand. Okay, I'm not getting any reply from you, so I'm gonna move on to the next question. Right, I think that's all questions that came. So let me talk a little bit about the breaker. This is again, it's not the, it's my experience. Okay, you can disagree with that, and that's fine. This is just my experience, and I'm showing you high probability breakers. When you are looking for breakers, okay, let me open a new one if you allow me. Oh, it did. Nice. Let's choose. Wow. Nice. Price is interesting. That's exactly what I wanted to see this week on the pound Aussie. I don't think I need to leave this one on, but choose just one and hide this. Okay, so I have a clean white background. When you're looking for breakers, right? The movement, right, should be something like this. You have to have a high time frame level. Okay? You have to have a high time frame level. Without this, that movement you're seeing is not a breaker. Right, so to answer your question, this is why I was saying that I don't see that as a breaker. Okay, without the high time frame level, I don't see it as a breaker. All right. Now, when you price hits the high time frame level, okay, you are going to look for this kind of price action. Price moving down. I'm just showing you high probability order block breakers. I don't know why my lines are so crooked. Alright, you are going to be looking for something like this. Okay, a movement down, a movement up, and then a big drop. Okay, usually when this happens, price is not even gonna bother coming up here, but if it does, that's going to be your highest probability breaker to continue going down. All right, so the idea is you're going to look for a high time frame level. You're going to anticipate price going to hit that, but before price hits it, right, don't look for, because there will be times that price will do this. Okay, this is not the kind of break I'm talking about. The kind of break I'm talking about is this. This one. Okay, it might look the same, but it's not. Okay, versus this is the same level. Notice any difference? That's what I'm saying. This is kind of, experience thing, where with this movement up, okay, price makes a new high and then it drops back down, it goes up and then break, versus this one here, price makes a low, it goes up, it hits the high time frame and then breaks down. It's two different things. Okay, the reason why I think this one is high probability, it's got to do with the idea of a balanced price range, right? A balanced price range. The fact that price went up, went down, went up, and then went down, right? This whole area is known as a balanced price range. So price should not be coming up. This price going down to go up to go down, we only have price go up and down, so it can come back up again. But here we've had price go up, go down, go up, and then go down. So it's like price has worked this area here, hence any pullback to the down candle here, it should see a sell-off. All right, so let me go and show you an example. Not here. Okay, oil. So with oil, price hits this order block here on a daily. Now watch here. You have price move down. Okay, before they move down, notice that we have a up movement, a down movement, and then price goes up, clears all these highs, and then breaks down. This down candle becomes the breaker. That is what I'm, I think I've deleted it. That's what I'm showing you. Versus um, price going up to let me see, okay, let me use this one here, and on the 1 hour time frame, no, on the H4, that one, okay, versus this one here. The high time frame level is up there, and we form a low and price run all the way up, right? It runs all the way up to hit it, and then we break it here. Okay, there are two different things. What I would prefer, right, is for price, let's move this to the hourly chart so you can see it properly. What I would prefer, right, is for price to come up, go down, go up, go down, go up again, and then hit it and break. That area will be wet, pull back, and then you want to sell short. Okay, so when you're going to take, if you like trading breakers, when you're going to take a breaker trade, pay attention to that. So same thing here. We have price up, down, up, and then boom, down. So we've worked this area. So price is not what supposed to come up here. So this down candle on the daily is a breaker, high probability breaker. Why? Because they've worked price down, they've worked price up, and they've worked price down again, taking out this high, and at the same time we are above a monthly high. Okay, so that makes this a high probability breaker. Price trades back into it, and then you see what you're seeing. Okay, so that's my little 2 cents on trying to identify not just that, not taking liquidity, because they both take liquidity. Both of them, the two breakers that I showed you, they both took liquidity. There's liquidity above this high, so run and then break. Or you can look at this way: high, high, low, high, high, break. This down candle, right? That's a breaker. Okay, but what I'm saying is, when you're looking for the highest probability breakers, okay, you want to see basically a balanced price range, but I'm trying to explain it in a way you don't need to know what a balanced price range is. I'm just demonstrating it to you. So here, that's also another example, right? You have price go down, then goes up, and then break. Okay, it makes a high, it makes a low, it goes up, and then it breaks. This one, notice where the high is. Okay, so there is if you take out here, this whole area can be revisited again. Over here, what does price need to come up here for? Nothing. What can price come up here for? There is a gap, so it can't go up there. Balanced price range, I don't know if you can find it on ICTs. I think he's talked about it in the recent 2022 mentorship on YouTube. I think he's talked about it, balanced price range. Same thing here. Look closely. watch this high, watch this low, watch this high, and watch this low. So how many times? Price has moved 1, 2, 3. Okay, in that area, that small area there. Here, price moved. There is this price action exposed with a gap here. So because of that, price can revisit up here. Okay, notice how price did not try to even go higher. It just hit this down candle here, right? And then it sells off. It's gonna take you some time to understand it. So maybe a little, practice on that, and over time, you will see it. Right? Go through price and then use the understanding that I'm providing to go and search for examples. So what you're gonna look for is price moving down, moving back up to take out the high, and then move down. If it goes and hit a high time frame PDRA, that makes it even like it's like the kiss of death. It's gonna kiss it and then go down. Here, right? It did hit this 2 up candles. That's a bearish hollow block, and then move down. That becomes a high probability breaker. Okay, same thing with the oil. Oops. I draw too much on these charts and then I have to remove them. It's okay. Look where the high is. Okay, look where the high is. How close is that high to this one? It's very close, right? That's the difference of what I'm trying to show you. How close is that high to that one? It's far away. That's what I'm showing you. Okay, so let's go back to this one and go to euro. So if you are thinking this is a breaker, just apply what I just showed you. How close is this high to that one? It's not close, is it? So it can revisit up here. Right? Look at this one. This high to that high. How close are they? Very close. Price breaks down. That down candle. Does it go up? No. And then it just goes down. Okay? See if I can find an example. This one. This and that and that. I didn't even touch it. Here. This high, that high, this low. Breaks it here. It doesn't even come back to it. Okay, so that's what I'm trying to show you. When you're looking for breakers, look for that. The other one can work, all right? They are all breakers, but if you're looking for high probability ones, I think here there's another one. How close is this high to that one? Very close, right? So if you break down, that down candle doesn't even get there. I'm sure in future, if price comes down to this, you will see the reaction. Those are also very powerful. That's also very powerful. If you see them, just you're not going to be trading it, right? You're gonna use it as you're gonna use it as a point of interest, a level to watch to see what happens. So let me see if I can find one. This one here. Okay, it's a level, it's a point of interest. It's not a level to sell or buy. It's just a point of interest. When price gets there, does it give a reaction? Okay, if it gives a reaction, then you trade it. There was one, I think this one has been talked about, ICT, for quite some time. On the daily chart. Where am I? This one here. That's a volume imbalance. And I think there was another one here. And another one here. So they are points of interest for you to watch and see what price will do when it gets there, right? So if price gives you a reaction, then you can then follow up. If there is no reaction, you don't use it. Right, there were two volume imbalances in here, and then it reacted off from this one. Could it be treated as internal range? It depends. Sometimes it'll be just above a high. So maybe it might be up here, right? And price will be trading above that high to trade into that. I think the first one that I showed you, that was how it was. Okay, so it was above this high here, right? And then it just fell off. So it depends on where you find it. Don't worry about whether it's internal or external, or just mark it. EU weekly has one. Let's go to weekly. If we close bearish, we will get one here. It's just a gap. Okay, so if we close bearish, we will get one here. Right? It will be closed, but it will be a absence of a candle. So nice one in here. All right, any more questions? I need to pop out now. Any last questions? How about reclaimed OBs? I don't use them. I've not trained my eyes. That's one of those PDRAs that I've not trained my eyes on. Right. that's one of the PDRAs that I've not kind of trained my eyes on, so I don't use them, if I'll be honest. It's just confusing. So maybe in future I'll train my eyes on that. How do you work on your patience? Naturally I am I'm patient, but with the market, it depends on the kind of trader you are, right? If price has not traded to your level, you just have to wait. It's something that has to be, either you have it or you don't. But if you are going to trade and for long term, then it's something that you have to develop. You have to have patience for the market to, do what it has to do. If you're in a trade and it's not moving, you have a choice. Let the market do what it wants to do, or you get out. If you're waiting for price to trade to your level, you have no choice than to sit and wait for price to trade there. Right? So it's something, it's just it's an attribute that some people have it naturally. If you don't have it, you have to develop it. As a trader, you have to. Okay? So, ways around it. The way around it is how you're trading. You mark out your levels. You want to wait till price gets there. That's patience. You have to have that. And if you're in a trade and it's not moving, you have to have patience and let price do what it wants to do. You can't force it. So, that I would say is something that is natural, and if you don't have it, you have to develop it if you want to trade. Is it 10 o'clock? Yes. Oops. Is it 10 o'clock? Yes. We are below this down candle. Right. That's it. We should see New York session maybe key off from here. Go low. We'll see. Anyway, I have to go. I have to go and pick up my wife. A happy wife is a happy man. How do you say that? I don't even remember. A happy husband is a happy wife. Happy wife is a happy man. A happy woman is a happy man. Oh, I forgot. The psychology. I'm gonna give a psychology session. Maybe Friday. Happy wife, happy life. That's it. I'm gonna give a very controversial psychology session on Friday. So strap up for Friday. We'll give some psychology session. Okay, and I'll see you guys on Friday. Okay, take care.